Okay, let's go. Welcome, everybody. The importers, exporters, producers, consultants, verifiers, and even competitors, as I've seen quite some have subscribed for this webinar, which is totally fine, by the way. Hundreds of people subscribed from 35 countries. CBAM seems to be a topic for many industries. Not always their favorite topic, though. We welcome you all. I'm here today with Jan-Joost Brinker from Dubrink and Dan Maleski from Redshaw Advisors. And Dan, many people in the CBAM field already know you. However, with so many people joining, I think it would be great if you could briefly introduce yourself.
Yeah, well, thank you very much, Marcel. Always great to be back with our friends Dubrink with another webinar. Hello, everyone. My name's Dan Maleski. It's a pleasure to be here. I lead the CBAM hedging and risk management team here at Redshaw Advisors, working with companies both directly and indirectly exposed to the cost of this regime. So we don't do anything with compliance. That's for the fine folks over at Dubrink to handle. We do more on the hedging and risk management element. But nevertheless, thank you very much for here. And back to you, Marcel.
Great to have you here. And JJ, Jan-Joost?
Yes, hi, good afternoon. I can hear myself, Marcia. Good afternoon, everyone. My name is Jan-Joost Brinker, JJ, Chief Technology Officer at Dubrink, primarily responsible for our flagship product, the platform, as well as in charge of our consultancy teams, trying to navigate CBAM.
Today, we're more than with 2,200 companies on the Dubrink platform, which is available in 29 languages. Ranging from SMEs and to multinationals. We're ISO 27001 certified, and we actually combine technology, expertise, and automation to make CBAM more manageable and future-proof. Over the past years, we have actually developed a wide range of services from strategy advisory for CFOs, how to deal with CBAM, also all the way to practical support, such as contracts for example, indirect representation. And we're here to help you out. For those that know CBAM very well, like consultants, for example, we serve as a software backbone. At Dubrink, we believe it is important to keep CBAM as simple as possible for our clients. However, the mechanism, on the other hand, just became, again, a little bit more complex. And today we're here to discuss the draft regulation, which was released last week by the European Commission, to break it down and to kind of help you understand. But before we continue, JJ, could you briefly go over some housekeeping rules?
Absolutely, would love to do that, but you would have to make me co-presenter for that, or just do it yourself, I guess. You can just click around, that's fine. We'll manage it like that. Great. Yes, so quick heads up. Everything we will be presenting today is based on the draft regulation. That means that not everything is set in stone. It's currently up for consultation. That means that you may or may not still see final changes adopted at a later stage. So just a quick heads up that everything we tell you today is based on our current knowledge, but of course, as the mechanism evolves, so does the information about that. So if you watch this back in a couple of weeks' time or a couple of months' time, some of it may have been outdated. Then quick house rules, or like how to ask questions, I suppose. If you look at the bottom right corner of your screen, you will see 9 dots. If you click on the 9 dots, a sidebar opens. And if you select the option Q&A here, you will have the option to ask questions. Please click on the Ask a Question button here. You can optionally choose to answer the question anonymously. We will pre-approve questions before they become visible. And if you see a question that's already there, please be so kind to upvote it rather than asking the same question again. That makes it a little bit easier to manage. Lastly, of course, English is not my native language, unlike Dan. If you would like to watch this with subtitles, feel free to press the CC button or closed captions. That will give you, if all goes well, some sort of subtitles, and you even have the option to translate that. I'll show you in the next slide how to do that. Simply click on the little cog wheel on the top right corner, and you can switch between live captions as well as translated captions, and you would theoretically be able to watch this with subtitles in your native language, assuming that that we speak clearly enough. Good. That out of the way. Back to you.
Thank you. So thank you, Jan Joost. This is actually how the webinar will look today. I will first explain some fundamentals of CBAM and the ETS system. Then we'll discuss, for example, why carbon price paid is far more complex than many people currently assume. And after that, Jan Joost will dive deeper into the carbon price paid mechanism and the related calculations. We will finish with a Q&A. There will be also many other topics that will be addressed. At the end, we do the Q&A. But on these topics, I realized that some participants in this webinar are just starting to learn about CBAM, while others work with CBAM every day, like some of the consultants that are here around. And the range of industries, all from here, is quite massive. And it's actually completely normal that you don't know the terminology of CBAM and ETS if you're not confronted with CBAM on a daily basis. Unfortunately, certain terminology in our field is unavoidable, and at the same time, apologize. I don't want to lose your interest during this webinar. And I was actually this morning looking into this integration capabilities, and I saw this one, AI tools, and I was like, why don't I just advise the people who are not that familiar with CBAM and ETS to just turn on your AI, put there a prompt, and just ask questions if we are using certain words which are, let's say, too specific and where you do not know the definition from. So why we're here, the European Commission is preparing the implementing acts that will operationalize how foreign carbon costs reduce your CBAM liability. And this transition introduces significant financial and operational complexities for importers, global suppliers, consultants, and verifiers. Let me move my own slide. Here we go. So on one hand, we have the ETS, and that is a domestic carbon pricing system. It requires the surrender of carbon allowances. Carbon allowance is the right to emit CO2, and it kind of enforces the polluter pays principle within the EU borders. CBAM is there to create a level playing field. CBAM does not replace the ETS. It is that if you are a factory and you are active in a country outside of the EU, if you import products which contain CO2, the EU asks you to pay over that. I can show you that in the next slide. So in this situation, we have over here the EU with its factories. They ask to pay over CO2 that goes via the ETS system, but there can be factories in other countries around the world and that want to export to the EU. In that case, the EU says that's fine, but at the border, you have to pay over the CO2. Now, let's look a little bit deeper into this factory. In real life, it's actually the case that there are factories providing to other factories that are providing to a company that exports, and over those emissions, you have to pay CBAM. However, and by the way, that's a side note, this by itself is kind of complex. For example, the two factories on the left, if you do not have data, which is verified, that actually means that everything from there on in the supply chain, you're not allowed to use as actual values. Actual values are values where you exactly know what the emissions are that are admitted. We have on YouTube quite some webinars available where you can learn more about the difference between, for example, default values and actual values. We will not dive into that subject today, but it is an important part of CBAM. But what could be is that these factories, that they actually already paid carbon in their own, for example, ETS system or via any other mechanism. And in that case, you don't want to pay again for CBAM. So you can kind of not pay those costs, and that is called carbon price paid. So why is there carbon price paid? It is to deduct the explicit carbon price paid in the third country from the overall CBAM liability, and it prevents double charging because you don't want to pay double. Now, to understand this better, how this actually works, we have to look into the CBAM cost formula. And to do that, I have to actually explain what you see over here. So on the left side, you have the amount of certificates you need to pay for. EU CBAM, you pay via buying certificates, which only can be done from 2027 on. And how does it work? You have the specific embedded emissions. Those are the emissions which you get from your factory. That's how much ton of CO2 is in the product that you are, as an importer, importing per ton. And you can deduct from that something. And that is the CBAM benchmark times the CBAM factor. The CBAM benchmark is actually a product-specific emission reference value. And generally, that's based on the average emission performance of the 10% most efficient EU producers under the EU ETS. You can multiply that times a factor. That's the CBAM factor. And that factor will be lower every year. And around 2034, it will be 0. Now, usually the blue part, the carbon price paid times the specific embedded emissions, is the part where we said, well, there's not yet enough known about that. So for now, you can skip that. But that is literally what is changing now. Carbon price paid is in play. And if I would make an example, let's say that you're importing steel, and the steel has an SVE, so it has an amount of CO2 of 4 per ton that you're importing. You can deduct a benchmark, in this case 1.6. You multiply that times the CBAM factor, and then you can suddenly deduct something from that. And in this case, that is a carbon price paid of 20 euros, meaning that 20 euros have been paid in the country of the area of that certain factory. You multiply that again times the SEE, and then you end up on a price of 80. In this case, you divide that 80 by 80, because in this example, the price of a CBAM certificate in the EU is also 80. And then you end up with the following calculation: 4 minus 1.56, which is the green part, minus 1, which is the blue part, is 1440 times 80, and you would have to pay 115 euros, around 115,000 euros. Now, if we increase the carbon price paid, we end up with 160 over there. We divide it still by 80, meaning that we are not having a blue part of 1, but of 2. And you can see that you have to pay much, much less. So carbon price paid does have an effect on how much CBAM cost you pay as, for example, an EU importer. Now, where is this going in 2030 or beyond? We don't know, but we can imagine that if there are many, many countries where you have to pay CBAM, it is actually going to be a little bit messy. You have to calculate emissions, prove, verify, create an audit trail, and calculate cost and pay for it or not. And there are ways to simplify that a little bit, but that is something for later. For now, we're going to focus on carbon price paid. And as they said last weekend, I think, at the Eurovision Film Festival, then take it away. London is calling.
Wonderful. I'll get my best impression of the clash. Let me go and share my screen here, Marcel. Do me a favor and give me a thumbs up if it's registering on your end. So just as I think CBAM couldn't get more complex, I have to listen to that, and I realize, rats. Yeah, I just figured it out, and I'm sure a lot of us might be feeling that way in the audience. Hopefully, my job in the next 10 minutes is to have people try and make sense of what's going on here, and hopefully, you can end this next 10-minute section a little less confused as where we are right now. Marcel, can we see the screen? Brilliant, wonderful. So as I mentioned, it'll take, call it maybe 10 minutes to go through everything. We're going to start with understanding what a cost of carbon actually is, and more specifically, what a real effective cost is. This might sound like semantics, but when you start talking about large values, it starts to matter quite clearly. Then we're going to move on to a new term, a term that's really recently appeared in this implementing act, something called a carbon credit. We'll figure out what that is and where that really is going to sit and lie in the CBAM story. And then we're going to look at the wider implications of these carbon credits within these compliance regimes. So to begin with, we're going to take a step back and provide a little context here. When it comes to a cost of carbon already paid, what does that actually mean? And to begin with, we have to appreciate not all costs of carbon are the same. So when we look at the global sphere of costs of carbon besides the EU, there's quite a wide variety. There's many different shapes and sizes of carbon pricing, and at the core, carbon pricing simply means that if you operate and emit carbon or greenhouse gases within a jurisdiction or a country, you are legally required to pay for that carbon. Okay. Now, again, governments can structure that regime in many ways, and actually CBAM technically is one way that a cost of carbon occurs. If you want to import goods into the EU, you gotta pay for it under the CBAM. Now, broadly speaking, to really wrap our heads around how the CBAM is going to be interacting with these costs of carbon, we can kind of take a small look at what kind of variety is out there. When it comes to, if you're on the call and you're looking at how CBAM might impact my exposure, the main way is going to be through things called emission trading systems, ETSs. This is one of the most widely used costs of carbon in the world, and predominantly because it's quite effective. Emission trading systems are typically linked to a market-driven demand and are very good at reflecting the wider economic environment that industry might be in. Industry is very cyclical, and having a market-based cost with an ETS can be quite applicable and quite good. And so this can probably be the most widely talked about cost of carbon, which we'll be focusing on later in this presentation. The next most common cost of carbon is a carbon tax, much more simpler. A carbon tax is rather straightforward. We see them in jurisdictions such as Singapore, and really it's just the government setting a fixed price on emissions. And the last kind of carbon tax we'll be looking at is kind of a hodgepodge of various fuel standards and energy levies we see globally. And if you combine all of those three into one consortment, you start to appreciate the picture here, which is there's a lot of variety going on in different greenhouse gas emissions covered, in different pricings, in different MRV frameworks. And the result of this is the complexity when it comes to what we're going to be talking about later on, which is what is a cost of carbon and how does CBAM view it? Now, there's no harmonized system for carbon pricing, and it's part of the reason why the European Commission took so long on this implementing act. And when it comes to if we thought this was complicated enough, most of these carbon pricing regimes don't actually require all the companies exposed to pay for all of their emissions in the regime. And so this is really the first major point I want to make today. The first point is if you're a company exposed to an global ETS, an adjustment will be needed for CBAM, because the vast majority of global carbon pricings will be receiving free allocation, free rebates, tax exemptions, and other subsidizations that soften the actual cost of carbon. And so if I look at the importance of why this matters to CBAM, it's because CBAM only accounts for the effective cost of carbon net of any of these adjustments. So I mentioned in the beginning, my job is to help you make sense of this. So what does this actually mean in principle? Let's say I'm a steel company in one of these emission trading systems, and I produce 1 million tons of carbon a year. Likely, I will be given the majority of those carbon permits completely for free. In the EU ETS, what happens is I will wake up one morning and the European Commission will deposit, let's say, 800,000 of that 1 million tons of carbon in my trading portal. And so what CBAM is saying is if you're exposed to the regime, we're not going to count the free permits and rebates you are receiving. We're only accounting for what you actually pay, the effective cost. And if we look at that, well, really, there's not many jurisdictions that actually have an effective cost of carbon anywhere near as close as what the EU CBAM EU ETS has. So that's takeaway number 2 of this presentation, is an effective cost of carbon is not a silver bullet. This is not going to radically reduce your cost of carbon immediately. It might in the future as we see the robustness of the global ETSs evolve, but in the short term, there will likely be pain. There will likely be a significant spread in delta between what you're paying domestically and what you'll be paying for the CBAM. Okay, so everything I've just said shouldn't really be too new. This is everything we've known for probably the last 2 years. The latest implementing act substantiated and further a lot of these points. But what's quite new in this new implementing act, and something I'm going to be kind of spending the rest of my presentation on, is how CBAM will be interacting with the various kinds of carbon credits within these mandatory regimes. Okay, so I appreciate a lot of us on this call. We might have come across the term carbon credit before. To some of us, carbon's carbon, it just exists in the atmosphere, but we have to break it down because this really matters, because we're not talking about a few euros, we're talking about tens and sometimes hundreds of millions of euros here. Distinction is quite important. So let's take a step back, play a little semantics here. What is a carbon credit? So to do that, let's understand where they fall within CBAM. CBAM says if a country operates a mandatory carbon pricing regime, right? In my last presentation, I said those are the emission trading systems and the carbon taxes. So within those emission trading systems, those mandatory regimes, if they permit the use of carbon credits, CBAM may recognize the cost of those carbon credits as an effective cost of carbon paid. Okay, so that's really what the legislation means. So let's take a step back and actually look at what that looks like practically speaking. So carbon credit is a topic we'll come to in a minute, but the first thing we need to touch on is what's a carbon allowance. Because to understand a carbon allowance, we need to understand a carbon credit, we need to understand a carbon allowance. Most of us should know what it is. A carbon allowance, as Marcel already said, is something like a CBAM certificate. It allows you to pollute. One CBAM certificate allows you to import 1 ton of carbon under the CBAM. One EUA, the European Union allowance, allows you to pollute 1 ton of carbon under the EU ETS, right? So it's simply the ability, the right to emit. This is created by governments. So the UK, the EU, China, South Korea. It's a government-issued permit. They're typically tradable, and very importantly, they're standardized, and they often have a very high market value associated to it. And they're typically used for regulatory compliance. CBAM certificates will be retired to comply with CBAM. EUAs are retired to comply with the EU ETS. So carbon allowance, CBAM certificate. Here's what's new. What's new is this thing called a carbon credit, an offset. Carbon credits, offsets, unlike carbon allowances, are issued by the private sector by standards. They represent 1 ton of reduced, removed, or voided carbon. Carbon allowance represents 1 ton of abated emissions. Carbon allowance represent 1 ton of reduced, removed, or voided carbon. Carbon credits are not standardized. They can be traded, and they often represent a large variety of markets. Carbon credits come in many different shapes and sizes depending on a bunch of factors within the vintage, the methodology, the project type. And so the result of this is having a voluntary carbon credit, which is typically used for voluntary climate targets, to start to be used for more compliance reasons. And so what CBAM is saying is if a mandatory regime that uses these carbon credits to meet some of its obligation, if that regime allows carbon credits, then CBAM will allow that to be a deducted cost of carbon. And that's the main takeaway from this slide. We're introducing what potentially could be a new cost of carbon under CBAM. So looking at this from the actual impact perspective, let's take a look at how this is going to work practically. I'm a visual creature. I like visuals, and so I wanted to visually show what this actually looks like. The reason a lot of us don't know what a carbon credit is because in the markets we're used to, i.e. CBAM and the EU ETS, we haven't really talked about them. Right now in the EU ETS, you can't use carbon credits. You can only use carbon allowances. Back in the day, phase 1, phase 2, and phase 3, you could use something called the CER, but right now you can only use carbon allowances. So the term carbon credit is new because of that. But for the rest of the world, carbon credits typically are used within compliance markets. A lot of the upcoming and new ETSs allow a very small portion of their total obligation to be used and met with carbon carbon credits. So taking a look with, let's say South Korea, for example. South Korea allows for 5% of the total obligation for its compliance to be used with approved carbon credits. So that would either be, your Korean allowances or your Korean carbon units. And so looking at how CBAM, again, to really reemphasize how CBAM is going to view this, let's say I'm a South Korean steel producer and I have to surrender 1,000 tons every year under the Korean ETS. And as I just mentioned, the Korean ETS allows for 5% of my total obligation to be met with carbon credits. So therefore, if I, the Korean steel producer, buy and retire 95% of my exposure using allowances and 5% using carbon credits, I would be in compliance with the Korean ETS. And what CBAM is saying here is CBAM would recognize that as a compliance cost. On the other hand, let's say I'm the same Korean steel producer, but this time I'm given all of my allowances for free, which is very common within these countries, and to an extent, even within the EU ETS. And let's say for my own voluntary sake, I don't buy 1,000, I buy 10,000 carbon credits for my own net zero claim. None of that would matter. CBAM would not recognize any of that as an effective cost of carbon because I did not buy the carbon credits for a mandatory legally binding regime. In my legally binding regime, the Korean ETS gave all my allowances out for free. Now, we'll have some time for Q&A later on. I'm more than happy to dig into the meat and potatoes of this because we could be here for about 4 hours. But broadly speaking, these regimes will be allowing domestic carbon credits, which is CCERs if you're in China, or for Korea, for example, your Korean credit units. And that's typically the most common type of carbon allowance within these regimes. However, what CBAM has said, which is quite interesting, is that they will be looking to give the thumbs up on if a compliance ETS regime allows international Article 6 credits. CBAM would see that as an effective cost of carbon paid. So that means CBAM could, in theory, generate some demand for international Article 6 credits. The scale of that demand, well, the jury's still out. There's a lot of economic considerations on if a country would want to use Article 6 credits to meet their domestic demand. As of right now, I believe Korea is the only ETS that even allows international credits within their ETS, so that's a different story. But nevertheless, the European Commission is giving that option for countries to choose. Now, I'll stop there, as I could probably talk another 3 hours on a topic of Article 6 and CBAM, and maybe we can save some of those questions for Q&A. But with that being said, I'm going to hand it back to JJ, who will take it from here.
Thank you very much, Dan. One question came in, maybe a very small remark from one of our favorite commenters. You mentioned that the standardized, you talked about standardized and tradable, that's basically what qualifies the allowances. And you mentioned also CBAM certificates being tradable. Saul is making a remark that
CBAM certificates aren't, typically allowances are tradable. Now, an allowance simply means it allows you to do something. It allows you to pollute. Typically, allowances are tradable, but not always. Certain credits, for example, issued in the U.S., for example, you can't trade them. But the typical characteristic of an allowance is tradable per UKA or EUA. But of course, Saul, the knowledge of everything CBAM, of course, is right. CBAM certificates are not tradable.
That is because they are not really allowances; they're more of a derivative of the allowance, I suppose.
Yep. But nevertheless, they allow someone to in this case pollute and then import that good within the EU bloc.
Perfect. All right. Having that cleared up, happy to proceed. I think one of the first questions as an importer now, and maybe a supplier even, or even a consultant, I suppose, is the question: who reports and checks the carbon price paid? Now, I have 3 questions that I put together. The first one is who provides the information on the carbon price paid? The second one is who verifies the information? And perhaps lastly, do you even need to calculate it? Going back to the infamous Excel template there is currently already support for the carbon price paid within the Excel communication template. Now, the reason I bring that up has to do with the fact that it is your supplier base that has to provide the carbon price paid. That means that it is the verifier that will go and check the carbon price paid and the attribution of the carbon price paid to the individual processes down to the CN code level. I mean, we have support for it within the Dubrink platform as well. And I specifically took this excerpt from the verification principles that have been published by the European Commission back in December. The free allocation and the carbon price paid are part of that. So it's very important that if you are an importer today, probably prior to December, you never asked your supplier base for their CFA, their specific embedded free allocation. You just concerned yourself with the specific embedded emissions. But now, in December, we found out, okay, you have to actually also ask them for the benchmark. On top of that, and that's really what I the point I'm trying to make here, is that you also have to ask them potentially for the carbon price paid, because those three variables, and of course, we will not see as much of that in the first year, but over the next few years, this is going to be a critical part of the information that needs to be provided by your supplier base, because it will just simply prevent double taxation on the side of the importer. Now, perhaps let's dig into some of the more technical stuff here, how to actually calculate the carbon price paid. Now, in order to do that, let's take a small step back and let me show you a very, very simple production process where on one hand, we have a production process one, which creates product A, and product A is sent to the importer. This is a very simple good. Of course, for iron and steel value chains, there could be a whole series of processes and modification steps that products undergo. But just to make my point here, allow me to just stay with this simple example. Now, you have to understand that when measuring emissions in CBAM in general, you measure those on installation level. That means that, and the reason for that can be quite easily explained, right? How many gas meters do you have in your facility? You usually have a single gas meter right at the entrance, and that's the data that you can collect. And what you then can do is you say, okay, I have collected all this information, the emissions data on installation level, and I'm going to attribute the different emissions that we have within the factory to different production processes. Now, the critical eye may see that the 40 and 31% allocation that you see in process process 1 and process 2 does not add up to 100%. That's because the production processes that take place within a facility do not necessarily have to all be CBAM processes. Now, the price of carbon can very well be measured on installation level, but the attribution under CBAM follows the same exact rules as the emission attribution. That means that the carbon price paid on installation level might not necessarily work out in the exact same way as it would. Sorry, it has to work out in exactly the same way as it would for emissions, simply because it follows the exact same methodology. It's mass-based, it's a weighted average of the different production processes. Now, if we fill in some numbers, because that makes things a little bit easier to understand, imagine that we have a facility that produces 21,000 tons of CO2 in their facility, and somehow 13,000 tons of CO2 is allocated to a production process that produces 5,500 tons of products. We have emissions on the one hand and reporting quantity or output on the other. If we divide the two by each other, we can estimate we can calculate the specific embedded emissions, the tons of CO2 per ton, in this case, 2.363. Now, the exact same logic applies also to the carbon price paid, except there's one additional step, and I'll show you that. The first is carbon price paid is again calculated on installation level. The installation or the facility, the supplier, has paid a specific carbon price during a particular part of the year. It's important, not every carbon market necessarily charges at the same time, so you do have to really carefully align that the timing matches, right? If you're reporting CBAM from January to January, and you're reporting under your domestic ETS from March to March, it might be that the price for carbon is different in the second part of the year. So you do have to account for that. The Commission actually speaks about monthly reporting, ideally. So every month you would have to essentially measure how much carbon has been paid for and allocate it like that. Now, if we look at the exact same example, but instead of looking at it in terms of emissions, look at it in terms of carbon price paid, then you would see the example of a supplier who has paid $70,000 US worth of carbon. The first step is that we have to convert the carbon into European currency. The European Commission will publish an annual exchange rate from, in this case, dollars to euro, which we would use to calculate that into euro. Then the next step, and this is the exact same production process as before, we put the euro at the top of the equation and we divide it by the total amount of goods produced. And that's ultimately what's going to give you the discount, if you may, or the carbon price paid in euro per ton at the country of production. And then if we go back one slide, the question becomes about this $70,000 US. How do you actually calculate the total carbon price paid? And there, it depends a little bit on the methodology we apply. Dan highlighted there's a few different ways of different kinds of taxation systems. The first one, obviously, the ETS. The second one could be a flat tax. And the third one could be a tax embedded within the fuel already. Now, there are also different calculations for that. This kind of stuff is usually what scares, I would say, my business partner the most, because we always have these discussions like, why does it have to look so complicated? And it's really just to account for every possible scenario. If you just simply look at scenario or equation 1 and equation 2, I see a lot of comments, people responding. If you look at equation 1 and 2, this is a very, very simple equation because it just says cost of carbon paid divided by the emissions covered under that. I have actually a simple example of that. If we have paid 100,000 Chinese yen abroad, and we have emitted, or that corresponds with 1,500 tons of CO2, then we simply convert the yuan to euro with the exchange rate I mentioned before, divided by the total amount of CO2 it covers, and we would get to an estimate. That's relatively straightforward. But you can also imagine scenario number 3, which is the last one on the bottom of the screen. This one actually accounts for the scenario where you do not just have an emission, you do not just have an emission system, but perhaps you also have a flat tax. So it's just a sum of multiple different ways of compensating carbon. And you would just have a weighted average. I've paid 12% in ETS, 14% in carbon credits, or 10% is the limit, I believe. And the third bit would be perhaps a flat tax that is applied to the country. Then there's also this interesting example related to carbon price paid for indirect emissions. So again, we have the exact same example, except that we do not work with a total we do not work with the total amount of emissions. We work actually with the emission factor, and we work with the quantity of electricity consumed. Of course, when you multiply these two with one another, you'll end up with the same amount of total CO2 consumed. Works out to roughly about the same logic. Then a few things that might be of interest is that you may only subtract the carbon price paid that applies to your sector. That might not be that obvious at first, but if a country of production has a carbon price for indirect emissions, that does not mean you can use that for your steel and iron products. Because if you're not billing, or if you're not paying for direct emissions, if you're not paying for indirect emissions, you cannot claim the carbon price paid for indirect emissions either. Okay? So if the direct emissions are in scope for your sector, you can only subtract the direct carbon cost. If the indirect emissions are in scope, and this is only for electricity imports, then you would subtract only the indirect carbon price paid. And of course, if both of the emissions are in scope, then you will be able to subtract both. And then there's always a mention of effective carbon price paid. And Dan touched upon this briefly, but you have to understand that there is a difference between what you are actually paying versus what has actually been paid for. Because if the government gives you a subsidy or a rebate, that doesn't really mean that you are paying for that carbon. And the rebate, the refund, and the free allowances, and even electricity compensations all have to be taken into account, and you essentially subtract that from what you have claimed to have paid. Now, if we look at the exact same example as before, but we look at it with a rebate, we might find that a Chinese producer pays 100,000 Chinese yuan for 1,500 tons of CO2, but that the Chinese government actually gives them 40,000 Chinese yuan as a rebate, a discount. That effectively means that they have not paid for 100,000 Chinese yuan, but they've actually paid only for 60,000, because of course the rebate is subtracted from the amount paid. If we then convert the 60,000 Chinese yuan into euro using the exchange rate mentioned before, and divide it by the total amount of CO2, then in this case it would work out to about €5.04 per ton of CO2. Keep in mind, all of the numbers I've shown you are completely imaginary. I've just put some things together to give you an example. This is not actually what the carbon price would look like. Maybe we can talk about that a little bit towards the end, but I think the first real cost of carbon that we're going to see apply here would be the UK. I suppose maybe you have some thoughts about that, Dan. We can talk about that a little bit later. But for the moment, this is the mechanism, at least, that you would have to consider. Lastly, there are also a couple of obligations that come with reporting the carbon tax, the carbon price paid abroad. The first one, of course, a lot of receipts. If you are subject to an ETS, then you will have to show that you've actually bought these allowances, that you've handed them over. Perhaps also logic to justify how you have allocated the installation level carbon price paid down to the individual process. The documentation on the type of evidence that needs to be provided is quite comprehensive. I took a few screenshots just to show you the kind of complexity that you could expect potentially from your suppliers, or the type of complexity that your suppliers would be facing. And then there is something else that I think would be worth mentioning, and that has to do with the exchange rate. So the exchange rate will be set annually, but I took two relatively turbulent currency markets here. First one, euro to Indian rupees, and secondly, euro to Turkish lira. And you can imagine the currency fluctuates, especially the Turkish lira. The currency fluctuates quite a lot. So purchasing something like paying for emissions back in like last year is going to be a big difference compared to paying for emissions towards the end of this year. And having an average price probably would equal that out, but it is just one of those complexities that, a lot of people don't think about that. They see in a single exchange rate, but think about it that exchange rates are going to matter a lot because inflation in certain countries is just a lot higher. And then when converted back to euro, which is going to be the primary currency for the CBAM, European CBAM, carbon price paid methodology, it's going to get quite tricky, I think. And then I would very much like to hand it back to you, Marcel.
Thank you very much, Jan-Joost. This webinar is also recorded, and it will be available on YouTube. It's sometimes a complicated topic. Use that recording to check these calculations again and to understand the principle if this is something what you see for the first time. 3 pieces of advice before we go to the Q&A. And that's actually just from Dubrink's experience. The first one is take a holistic approach to CBAM. We noticed that we get clients knocking on our door in with all different reasons. Some of them have a container which is stuck. The other one wants to automate CBAM. The third one actually would like to have training. What we see is that basic understanding of CBAM is really necessary, and it's more and more important that compliance managers really understand where CBAM is about. We, for example, do that via providing a training, for example, the ISC 3004 training for professionals. Declarants, for example, take the ISC 3002 standards against which you can certify yourself and to make sure that your professionals and your companies, and your company exactly know what to do with respect to CBAM. Second step, what we see is that we often see integrations happening. More and more companies just want to automate their processes. Then, of course, companies use with a platform. But what's very important is supplier activation. And we have learned a lot over the past year how to do things right, how to motivate factories. And actually, one of the main drivers is to just show the pain of the importer. If we forecast costs, for example, via a supplier webinar, and we show what the impact is for importers, they start to realize that when CBAM costs are going up for the importers, that if they do nothing, they're becoming less interesting for importers. And then, of course, what we also see is that ongoing support is very important. We do that via a CBAM success engineer. We have several people in our company that actually are almost like a live FAQ for our clients. They can be approached, questions can be asked, and we make sure that from A to Z, the companies can get delivered what they look for, all the way up to helping them with buying certificates in 2027. If I dive into that forecast, I would like to mention the following. This was the calculation, right, where we talked about. And some of those variables now are known. You, for example, know the volume of the products you import. You know eventually your specific embedded emissions, or that's a default value. That could also be the CBAM benchmark. Okay, on the actual value, they are not known yet, but for example, on default, it is known. The CBAM factor is given, and we hope eventually that you, of course, find out what is your carbon price paid. We can help you with that. What is not known is the price of a CBAM certificate, especially now. Then you actually know much more about this topic than I do, but the CBAM certificates fluctuate, that price is fluctuation. And then I'm not sure if you actually want to say something about it, because we didn't discuss this, but this is actually where you can help companies with, right? I know you don't like to sell, but it is important. It's a part of CBAM, actually.
Well, I'd always say the first train stop is to get your ducks in a row, to train, to comply, and the second train stop is to manage the costs. And so definitely recommend have the ducks in a row, chat with Marcel and the team at Dubrink, and from there we're happy to have a chat with you. Yeah, that'd be my recommendation if I could have any. Yeah.
Thank you, Dan. Thank you. And last but not least, and this is getting more and more interesting these days, is that verifiers say that more than 80% of the data, what they receive, is not ready to be verified. So imagine the quality of the other 20%. And that is a bottleneck. And as you might know, a verifier is not allowed to also be a consultant. So it's very important that the factory that is choosing for a consultant, and often that's in a third country with a local language, has to be someone that really knows what he's doing. Because if after several months you find out you don't have the right consultant, and there are quite some consultants that actually just put the CBAM cap on, and eventually you are literally their first client they ever look into emissions and calculations. See a lot of questions jumping in somehow. And there is a solution for that, and that's actually the following standard of the International Association 3006. It's CBAM for MRV consultants. It contains 270 pages of education, 13 self-study modules, 2 case studies. I think I have another slide for that. Yeah. 2 days of live training, examination, and certification. If you pick a consultant that certified against 3006, I'm convinced that that person knows exactly what is necessary to help you in the factory. Tomorrow, there's actually a webinar on this specific topic. And if you scan this QR code, you can participate in the webinar free of charge, of course. Final thoughts, gentlemen, before we go to the Q&A.
Sorry, I took over the presentation so that I can do a thing.
That's completely fine. I'll mute myself.
Dan, you have some final thoughts, perhaps?
Yeah, I mean, I think from a carbon pricing perspective, the biggest takeaway is you will never be able to run away from a cost of carbon. For CBAM, you will be able to either pay the European Commission in CBAM certificates, or you can pay your domestic, let's say, ETS, you could pay the cost with them. So you're paying the CBAM cost, either you're paying it to the Commission, or you're paying it to your domestic emission trading system or carbon tax. The next point would be that the use of voluntary carbon credits will never be able to be allowed for CBAM if you're doing it on a voluntary basis. It has to be under a mandated emissions trading system. Then we would look to say, just because you are in a country that has an emissions trading system or a carbon tax does not mean you're exempt from CBAM. I can't tell you how many times we get that question, and you know, it's one I really want to emphasize. Moving on, we would look to highlight some of the points that we believe are going to be happening in the future. Predominantly that carbon pricing is going to expand across the globe. That's the second main point of the CBAM, to encourage trading partners to have carbon pricing, and likely the carbon pricing is going to mirror the EU ETS price. And the last point we touch on is the entire conversation around carbon credits and Article 6 credits. This is all a draft right now. This is going to be scrutinized. And the main reason is because incumbent EU ETS exposed companies don't have the ability to buy carbon credits. So they're going to go to the Commission and they're going to say, why are you giving my competitors in China the ability to buy carbon credits when I don't have that myself in the EU ETS? So from a legal perspective, there's going to be a challenge. We're already hearing that. And so I'm sure this will be a topic that we'll be seeing quite a lot in the coming months. It's likely not going to be as simple as giving the thumbs up. There might be some points within some various legal institutions between the Council, the Parliament, and the Commission. Even though the Commission has authority on implementing acts, this will be definitely a point that will be scrutinized. Those are my final thoughts.
I think we're 5 minutes over time, so I think it's time to stop the webinar. Dan, I would like to congratulate you big time. It was great to have you here, and it's always amazing to listen to you. JJ, also thank you, of course. A bit weird to thank my own business partner, but has been very, very insightful. And
thank you for being here.
I'm sure that we helped some people here and there out. If there are any other questions you would like to know more about CBAM, you can always reach, of course, out to us. For now, I wish you all an amazing. Did I miss anything, JJ? Anything I still? Maybe you have some final remarks?
No, not really. Just thank you very much for attending. If there are any questions, feel free to reach out.
Anything to share?
I want to congratulate you, Marcel. If you're congratulating us, I'll give you a pat on the back there. Thank you very much for having me, as always. You guys are a pleasure to work with, and hopefully we'll do this again soon. But in the meantime, wishing everyone a wonderful week.
Thank you.